Um, so, uh, I would like to acknowledge that wherever we are this afternoon, we're gathered on Aboriginal land. I'm currently in Talawalada on Gadigal land, and I pay my respects to the Gadigal people, to their elders past and present, and to all First Nations people, artists and creators joining us on this webinar today. Please feel free, as I said before, to use the chat function and tell us which Aboriginal land you're joining us from. Say hello as always, and don't be shy. These conversations are for you, so please ask the questions in the chat as you need to. So thanks for joining us tonight. Next slide, please, Monica. For this conversation about tax, which is no doubt every freelance artist's and creative's favourite subject. This special episode has been programmed by popular demand and will be delivered by our previous guest, Monica Davidson, Director and Doyenne of Creative Plus Business, who happened to kick off this entire program of Create Exchange. So if you want to listen to Monica's first presentation, The Business of Creativity, it's on the Create Exchange webpage and ready for you whenever you'd like to engage with it. My name is Beck Dean. Next slide, please, Monica. I'm Senior Manager at Create New South Wales in Art Strategy and Engagement. Also joining us from Create are Isha Karnick and Yanni Clark and Ros Richardson. They'll be here to drop into the comments with the links and basically help me and our guests with your questions as we go. In this case, we do need to emphasise the point that Monica can't give you advice about your individual and specific tax situation, and she will get into this further, but all advice provided will be general.
Got their own like their giant heads.
So Monica will be taking us through an action-packed episode today. So before I hand fully over to her, let me give you an intro to some of her background. Monica is an award-winning expert on the creative industries. She started as a freelance writer, performer and filmmaker, and shortly after began sharing her entrepreneurial learnings by mentoring and teaching other creatives. In 2016, Monica founded Creative Plus Business, a social enterprise that educates creative practitioners about how business, money and marketing work. And Monica also continues her own work in film, releasing her feature documentary and musical Handbag, which is on SBS and back in 2023. So I am now going to hand over to Monica fully, and I'll just be in the background to answer and ask questions. Take it away.
Thank you so much, Beck. Hi, everyone. Good evening. It's very, very nice to be here again, talking about the scintillating topic of tax. What could be better for a Monday evening? And thank you for that lovely introduction. I, too, am joining you all from Gadigal country, and I want to acknowledge the original and ongoing custodianship that the Gadigal people have of this beautiful land. Beck did make, a mention of the fact that I am not going to be able to give you advice. So this is my formal disclaimer. I will not be giving you any individual advice tonight about your taxes for a few reasons. One, I am not a tax accountant. Now, if you are feeling nervous about the fact that you're going to be led through 90 minutes of tax talk by someone who is not a tax accountant, please don't be worried. I am allowed to teach you tax, but I'm not allowed to actually do your taxes or give you any tax advice. I'm also not a financial advisor, and so that means you might really want to ask me questions that start with the words, should I? I will not be able to give you any advice on that front. And frankly, if I can give you one of my first tips, please don't take any advice about your finances from people who haven't actually looked at your finances. That's my best tip. If you're going to take advice from anybody about the numbers, make sure they've actually seen the numbers and they're not just some devastatingly attractive random woman in a webinar who may be presenting to you. So that's my disclaimer. So tonight we're going to take it really basic. It's super, super basic tonight, and I hope everybody understands that and everybody got that memo We are not going to be doing anything complex tonight. What I'm going to be looking at is the super basics of tax, which some of you probably feel like you should have known as adults. Please don't be ashamed of that. I encounter very few adults, particularly working in the creative industries, who have had this basic training in tax, which is part of the reason why I was delighted when Create New South Wales reached out and asked me to partner on this webinar. So the first thing we're going to talk about is where to go to get help, and I've got a whole bunch of additional resources for you to just get you started so you know where to go for that sort of trustworthy information. I'm then going to go into the absolute super basics of how income tax works in specific terms. I'm going to talk about one of the big issues that we often have as creatives, which is simply called hobby versus business. And some of you are already probably nodding about this because it's something you've encountered. I'm going to go through the basics of, the broad strokes of tax deductions that you might be entitled to. And then I want to talk a little bit more about record keeping so that tax doesn't have to be this kind of terrifying thing that happens, going forward. So let's kick off, and I'll start by sharing resources. Those of you who've done webinars with me before know that I absolutely love a Dropbox, and I've made one for you. So in this Dropbox, it's a permanent digital folder which contains all of the resources that I'm going to be talking about. It contains all of the links that I'm going to be mentioning specifically. Now, there is a QR code on screen, or there is the link there to the Dropbox, which Isha has just shared with you. So please don't worry about having to write down every single reference that I give you or go hunting for all the resources. They're all there and you have permanent access to them. So please make do of those as you will. The slides, however, will not be in there. So feel free to take a screenshot if there's a slide that you particularly want to remember, because I don't share those, but I do share absolutely everything else. Now, most of the resources that I'm going to be sharing with you do come from the tax office, but there are some others as well. So let me just get into that first and foremost. One of my favourite free and reliable resources is business.gov.au. Business.gov.au is a federally funded support system for small businesses in Australia. Now, they aren't specifically targeting creative businesses, and they're not specifically targeting arts freelancers and professionals, but it's really hard to know where to go for free and reliable information. There's reliable information that you have to pay for, and there's a hell of a lot of free information out there, which frankly sometimes is a bit dodgy. So that's why I like business.gov.au, plain language information about topics that you need in multiple languages as well, and really accessible resources. So please do go and check that out as a first port of call. But of course, as mentioned, the ATO, or the Australian Taxation Office, I'll just be referring to them as the ATO from now on, are one of the best places to go. Now, you might be a little bit alarmed about the fact that I'm sharing resources with you about business, but I will explain why as I'm going through, because for most of you, as we're going to discover, you are, in a situation where you cross over multiple tax worlds, and so that's part of where these resources come from. Even if you don't necessarily think of yourself as a business, this is a really easy and simple place to start on the ATO's website that can help you get moving. It is very word heavy though, so there are some other alternatives too. The ATO also has webinars, a whole series of webinars, in fact, where they do a deep dive into specific topics. So, for example, I'm going to mention very briefly working from home. There's a whole webinar that you can do about working from home if you want to. Those webinars happen regularly, they're free and they're accessible. So again, it's a good idea to go into the ATO's education zone and find out more about those. If you prefer to acquire your information in an audio-visual way, they also have a series of videos called the Tax Basics videos, which basically follow the hilarious adventures of 3 different types of businesses. No, I'm really making this sound much more fun than it is, unfortunately. But it follows the kind of adventures, if you like, of a sole trader, a partnership, and a small company as they try and navigate their way through tax. And it's presented in a video format with case studies and actors and people, doing stuff in an interesting way. So, it's a little bit more dynamic. And in a thrilling turn of events, the partnership that features in these videos are graphic designers. So, we got excited about that. We got a bit of a creative look in here. This may not be your idea of a good time, but it is also important for me to mention that the ATO has its own TV channel online, ATO TV, where you can find out even more information about how some of these specifics work. And again, if you're interested in learning in a more visual way, or if you're learning in languages other than English, then please do go to their ATO TV. I'm sorry, I always smile when I say it. ATO TV, woo! They also have their webinars hosted there as well, so you can go and check that out. The last resource that I want to share with you at this point, yes, exactly, something to watch on a Friday night. The last resource is actually one that's on our website. So Creative Plus Business as a social enterprise does share a lot of information for free. And every year we publish our Tax Time for Creative Business blog. We will be updating it shortly because we're almost in June. The link to this is also in the Dropbox, and it really is just essentially a resource that mirrors everything that I'm going to say to you tonight. So you've got plenty of places to go for all that extra information, and I will be sharing more resources with you as we go along. Oh, I should have also mentioned as well, we won't be having a break tonight. So even though this is a longish webinar, we're simply going to be motoring through, and you can come and watch the recording anytime you like. I haven't got into the meat of it yet, but just before we get into it, does anybody have any questions, concerns, things they want to ask me at this point? I haven't seen anything
Not
pop
at this
up.
point, no.
No, too early. Too early. The only question is probably, why am I here? What has happened to my life? Like, well, you're here because you want to learn, and this is important stuff. So, like I said, let's get into the basics. Now, the next slide I'm going to share with you is frankly the most important one. And if tonight all you get is this, I'll be really, really super happy. One of the big issues with understanding finances, particularly for those of us in the creative sector, is the language that is used to describe some of these things. And it's really easy to get the language mixed up. So that's why I'm going to be pretty strict about how I talk about these things. And I'm going to be pretty strict about following this equation that you can see on screen. Now, you only ever pay tax on your taxable income. That's the amount of money that you've made in your business or as an employee minus the money that you've spent on professional stuff. So in other words, we start with your assessable income. That's the whole amount of money that you've made. Then from that, we subtract all of the expenses that you're entitled to, and what's left is called your taxable income. That's the bit that we pay tax on. One of the biggest problems that people tend to encounter is that they get mixed up between assessable income and taxable income. And I can understand why, because they're two confusing bits of terminology that kind of sound the same. But let's start with assessable income so we can be really clear about that. It's called assessable income because it's the type of money that you're going to make that can be assessed for tax purposes. So that's always the way to remember it, because not all of the money that comes into your life has to be assessed for tax purposes. Now, again, I'm not going to give you specific advice about your circumstances, but generally speaking, if money has come into your life through some kind of professional activity, chances are it is assessable income. In other words, it needs to be included in the equation that you can see on screen. Then there's all the other types of income that you might have, which are classified as non-assessable, and I'll get into that in just one moment. There is, of course, a resource on the ATO's website all about assessable income for business, but it also includes assessable income that you might make through any other kind of professional activity using your ABN, and it even includes making money through your creative activity where you don't use an ABN, for example. So if you receive, a profit share from an activity creative activity that you're doing, or if you receive a percentage of ticket sales or royalties, all of those things might be classified as assessable income for you. It can also include money that you might get from a grant. So if you receive a grant for something that is in your professional world as an artist, that can also be assessable income. Remembering that assessable income, if I go back to that last slide, is all of the money that you've made all mushed together and added up through the course of the year. Now, some of the things that are not assessable income are things that are more likely to come to you through your personal life. So that's the big divide. If it's money that's coming your way through any professional activity, it's probably assessable income. And if it's money that's coming your way through your personal life, then it probably isn't. And that would include things like a gift. So if somebody gives you a gift of money, it's not usually assessable income. It doesn't need to be included in this calculation. Now, if it's a really big gift, like if it's $10,000, the tax office might go, excuse me, what is that gigantic gift that you have just received? But, if it's just a little bit of money for your birthday or whatever it might be, of course, it doesn't necessarily count. Some of the other things that fall into this category are money that you might receive through an inheritance. It also includes money that you might receive from lotto, winning the lottery. It can also include money that you might win from gambling, unless you're a professional gambler. If you're a professional gambler, then it becomes assessable income. But if you just like to, flutter on the ponies once a year at Melbourne Cup, then you're not classified as a professional. And I know I'm probably making this sound a bit silly, but it is really important as creatives for us to understand how the tax department defines the difference between professional and non-professional. In other words, assessable and non-assessable. And I'm going to get into more detail about that in just a moment. So like I said, you'll have to speak to your own financial advisor or tax accountant or the ATO to get understanding about all of that. But that's kind of the broad brush. Now, I'm going to answer a question out of the time when I would normally answer it, Beck. I hope that's okay. But I've just seen Monique's asked a question about prize and award money, and I want to jump on that straight away. So, yes, Monique, if you win money, if your prize money or award money is connected to your professional practice, there is a good chance that it is also assessable income. But if it's prize money for something that you're just doing in your personal life, then it probably isn't. So, for example, if I win a prize, a financial prize for working as a creative business advisor, then it will become assessable income for me. If I win a prize for excellent karaoke stylings at the pub on Saturday night, then it won't be, because that's not my profession. Good question, and thank you for asking it. Now, hobbies is where this gets a bit confusing, and I'm going to come back to hobbies in a little bit. But hobbies, any money that you make from a hobby is usually classified as non-assessable income. So, for example, if I like to bake cupcakes and I just enjoy it, it's my hobby and I find it, pleasant and pleasurable, and I sell my cupcakes at the markets on a Saturday morning, and I like to sell my cupcakes to my friends if they're having a party or, down at the school fete. Even though I'm making money from that activity, it would not be classified as my profession. It would be classified as a hobby. You can already see, I expect, how this is going to become problematic, because what most of us are doing in our professional lives are also things that people like to do for a hobby. And this is interestingly where we kind of end up in the same category as professional sports people. There are people out there who play sport as a hobby, and there are people out there who do sport as their job. And the ATO has a whole lot of rules about the difference between those two things. I'm going to get into those rules in a minute, but I'm not going to do it yet because I want to just make sure we're okay with the basics first. But I'm planting that seed so we can start thinking for ourselves, is what we are doing our profession, or is what we are doing a hobby, and how do we tell the difference? I will answer that question for you in about 20 minutes. You will not like my answer. It's not my answer. It's the tax officer's answer. Please don't blame anywhere near me. Thanks. But I'll get back to that in a minute. So hopefully we've got a better understanding of assessable income. Assessable income is all the money that we've made all mushed together, and then it's just sort of sitting there in a big lump. And again, I'll go through that in a little bit more detail when I talk about how it works. From that big lump, which is called our gross assessable income, we subtract or deduct expenses that were necessary for us to spend in order for us to do our professional work. That's why they're called deductions, because we deduct them from that big amount that we start with. Now, again, I'm going to go through a list with you of what might be classified as a tax deduction for you, but the general definition is if it is a necessary expense, something that you had to buy in order for you to conduct your work, then it is probably a tax deduction. There are lots of rulings about what constitutes a tax deduction, and again, I'll give you a list a little bit later on in my webinar. But that's the general rule of thumb. And I know that you probably aren't going to believe me, but particularly when you're a creative professional and particularly when you're running a business or freelancing, there is quite a little bit of leeway between what you consider to be a necessary expense and what the ATO considers to be a necessary expense. Now, in that situation where you're dealing directly with the ATO, then of course there's going to be a lot of give and take about that. But we have a middle person usually in that relationship, and that person is your accountant. They might also have a whole other definition of what you are and are not allowed to deduct as a necessary expense for you to conduct yourself professionally. This is when it kind of gets complicated. But that's the basic idea behind it. We start with our assessable income, all the money that we've made, and I'll go through that in just a moment. From that, we're allowed to take deductions, things that we can subtract from that whole amount, and whatever is left over, that's what we pay tax on. How much tax we pay is dependent on how much money we make and what our assessable income is and our taxable income. And again, I'll go through that in a moment. You'll be delighted to know I'm going to do that by drawing you a picture. Quite a lot of pictures are coming your way. So if you want to draw along with me, please do. But that's basically it. That's the mathematical, I suppose, or the equation behind what we're talking about. Does anybody have any questions at this stage before I move on to the next bit, which is how does it actually work? I am not going to sing a song before I go.
It's all good here in the questions department.
Right, excellent. I'm sure there will be questions as we're going through. I'm hoping that the fact that we don't have any is because I've explained it all very simply so far, which is brilliant. Now, if you're a creative professional, chances are you're operating in 3 different sections of tax world. And I want to just address those different sections. Now, some of you are not going to be sitting across all 3 sections. Some of you might just sit in one, but most of the people that I meet do actually kind of straddle these 3 tax worlds. And that's why it's really important that you understand what that means. And also, as we're going to discuss later, that you get the support that you need to navigate those worlds, because your tax situation is far more complex than it is for most people. So first and foremost, you are considered to be just an individual who is participating in the tax system through your tax file number. Now, some of you are going to be making money through your tax file number through employment, full-time, part-time, or casual employment, which may be in the creative industries. It may not. You might have a side hustle doing something else where you make money through your tax file number as an employee, and that's, of course, totally fine. You might also make money through your tax file number if you're receiving Centrelink benefits, for example, or any other kind of distribution of money. And that's kind of the ordinary individual world that most people live in, and that's pretty straightforward. And I'm going to get into that in a little bit more detail in just a moment. So some of you are also going to be in ABN world, or Australian business number world, which means that you are now also participating in tax world as a business. You might be a sole trader, you might be in a partnership, you could be part of a not-for-profit organisation or a trust. There are lots of different types of businesses that you can be. And if you have an ABN, then you have this other separate world. You have a whole bunch of rights and responsibilities associated with having a tax file number, and there are a whole lot of regulations and rulings about how your life works in relation to the tax department because of that. You also have a whole bunch of additional rights and responsibilities and rulings, all the R words, rights, responsibilities and rulings, that apply to you as a small business when you're in tax world. So already we've got a more complicated situation than most people. And again, lots of us walk back and forth between these two worlds. Sometimes we operate these two worlds concurrently. It's incredibly common for me to talk to professional artists who are doing some work through their tax file number, let's say teaching, and some work through their ABN, let's say exhibiting or selling work online, and that's perfectly normal. You also live in a third world, which most people don't. There is a third universe inside the ATO, which is specifically about us as creative professionals. Creative professionals are unusual compared to most people participating in the tax system. And because of that, there are 3 separate tax rulings that apply to us. There is the tax ruling about income tax and carrying on business as a professional artist. There's a tax ruling about performing artists, and there's a tax rule about journalists. And from these 3 tax rulings, people at the ATO and your accountant can kind of extrapolate your situation based on these specific rulings and how the tax system works for people like us. And I want to make that really clear, because all of this exists and all of it makes sense. And I've read all of these tax rulings. I've even read the tax rulings that only kind of vaguely connect with our world. I'm aware of the fact that the tax department sees us almost like farmers. We bear a lot of the same challenges that people in primary industries do. I know that might sound silly, but if you have a think about it, we can sometimes make all of our income for the year in 1 month. If you're a performing artist and you do Edinburgh and Adelaide fringes, they might be the 2 big lumpy bits of money that you make for the whole year. Again, not unlike a farmer who might only make money at crop season, and then that's it. We are also, like farmers, buffeted by circumstances beyond our control. So we are equally affected by, climate change. We are equally affected by economic change. And so for all of those reasons, the tax office has a lot of experience of working with us. The reason why I'm bringing all this up is because I want to make sure that your accountant is also familiar with all of these things. And that's why in some ways it's a good thing that I'm not an accountant, because I know all this stuff. So your accountant should know more than me. Your accountant should be even more helpful than I am, because that's what you're paying them to do. And that's one of the reasons why, and I'm going to talk about this later as well, one of the reasons why I recommend that you find an accountant who specializes in the creative industries, because accountants that specialize in the creative industries are familiar with all three of these worlds and how those different rights, responsibilities, and rulings apply to you. If you are really curious, then I have linked all of those tax rulings are downloaded and in the Dropbox for you. I know, what a thrilling idea. And you can actually go and check them out and for yourselves and see how it works. So that's kind of where I wanted to start. But now I want to give you a demonstration of the usual way in which the tax world works if we're talking about tax file numbers and ABNs. So for that, I'm actually going to stop sharing my screen for a minute. I'm going to draw some lovely pictures. Now, when I say I'm going to draw some lovely pictures, I'd like you to understand that I am in no way a professional artist, and I want you to manage your expectations about how that's actually going to work. So now, can everybody see my screen? Yes, is that okay? Is that going to be visible if I share it with people? Yes, Beck is nodding. Okay, great. So what I'm going to do, and honestly, if you feel comfortable, I recommend drawing along with me, because, you know, that can sometimes make this process work a little bit better. So the first thing I want to talk about is how income tax works when we're talking about your tax file number, okay? Tax file number at the top. And what we're talking about is income tax. And in the world of your tax file number, your income tax is referred to as PAYG. That stands for pay as you go. If you're, you know, from the last century, like I am, it used to be called PAYE, pay as you earn, but we don't earn anymore. Now we go. It's much more exciting. So this is you. This is how your world works if you are part of the tax file number world. There are 3 participants in the process. You, the employee, okay? Now I'm using the word employee here, and that means every single time you use your tax file number, please focus on the number, because sometimes the language is a little bit tricky. If you are using your tax file number for professional purposes, then we're going to call you an employee. Full-time, part-time, casual, doesn't matter. So that's you. The next person in the relationship here is your employer, who unfortunately looks a lot like you. So let me just give them some distinguishing features. There we go. That's your employer. I'm sure it's a fabulous likeness. And then, look, I'm only making jokes, okay? I'm just channeling some of the fears that some of you might have, but, you know, this kind of scary creature at the end here, let's call them the tax office. Now, that is mean, and I apologise to anyone from the ATO who's watching, but, you know, I'm just channeling concerns that some people have. Okay, some people are enjoying it. I can hear them enjoying it in the background. That's good. Okay, so here's how it works. When you get paid by your employer in your job, your part-time, full-time, or casual job, when they pay you, they don't pay you the whole amount. They pay you your what's called your net. Now, what that means is that not all of the money that you're entitled to is actually in there. It doesn't all go into your bank account. There are 2 chunky bits of money that aren't included. One of those chunky bits of money is your superannuation, and that goes off into your superannuation account, which is not what we're going to be talking about tonight. That's what happens to it. And the other chunk of money is your income tax. This particular form of income tax is called PAYG withholding. PAYG withholding, and it's called that because your employer withholds it from you. They don't actually give you the money. They hold it, withhold it from you, and they give it to the ATO. Now, they do that, they give it to the ATO monthly or quarterly, depending on the size of the business. They don't just pay yours, they pay everybody's. Now, that's all of that is your money that's going to the ATO, and it's just going to sit there and wait. Now, what I'm going to show you now is a visual metaphor. I want to make it really clear. I'm just drawing funny pictures to help you to remember, okay? Imagine that the money that's been withheld from you has gone to the ATO and it's all piling up in a bucket. That's not actually happening. Please don't ring the tax office and ask them about your bucket, okay? That's not a thing. It's not really going in a bucket. It's a metaphorical imagination bucket, okay? The money is actually just sitting in trust, right? But that's boring and hard to imagine. So imagine all the way through the year, your employer, whether you've got one employer or 10, it doesn't matter, all of them are withholding income tax from you. And it's all sitting there in that bucket all year, just adding up and adding up and adding up. The 30th of June is the end of the financial year, and that's when this whole process stops. And then you will be able to log into your MyGov account and find out how much tax has been withheld. You should also be able to see that on a payslip. At the end of the financial year, you're going to complete some documentation, which is called a tax return. And in that tax return, you're going to explain to the ATO what you've been up to. Now, the ATO will see any money that you've made through your tax file number. If your employer has been doing things properly, all of that is transparent. They'll also be able to see any money that you've made through Centrelink because, again, all of this is managed at a federal level and it's all totally transparent. But it's here in this document, your tax return, but you're also going to tell the ATO about any other income that you've got, maybe from your ABN or maybe from shares or whatever it might be. And it's also here that you're going to tell the tax department about your deductions, which of course we're going to talk about in a moment. Once that calculation is made, then the ATO will tell you how much your tax bill is. And the idea behind this system is that the money to pay that tax bill has already been withheld from you. So that's a really good way of remembering it. You're not really paying your tax as you go all year. What's happening is your tax is being withheld from you based on the assumption of what your tax bill might be. But the final calculation doesn't actually happen until you fill out that tax return and actually tell the ATO what's been going on. Because in a piece of thrilling good news, the tax office is not psychic, okay? They only know what we're up to when we tell them and from what they can see in our bank accounts and other activities that we're undertaking. So that's how the system works. That's the idea behind the system. And the idea is that a little bit more money than is necessary is withheld from you each time you get paid to ensure that there's enough money in your bucket, your metaphorical imagination bucket, to cover whatever your tax bill is going to be. We eat at the all-you-can-eat restaurant all year long. We participate in all of the services that our taxes pay for all year long, and then at the end, we pay our tax bill. Hopefully, there's enough money in your bucket to actually pay that bill. And sometimes, if there's extra money in your bucket, you get a refund. Now, again, I want to be clear. The words return and refund are very similar to each other, but they are actually totally different things. Your tax return is all the paperwork and reporting that you do to tell the ATO what you've been up to, and the refund is the money that you might get back if there's too much money in your metaphorical imagination bucket. I hope that makes sense so far. I'm hoping. Becca's nodding and smiling at me, so I'm going to assume that it's kind of making sense so far. You can ask me questions as we're going along, but what I want to do now is show you how different this situation is when you're working with your ABN. And remember, you might be doing both. So let's talk about that. So again, we are still talking about income tax. Okay. We are still talking about something called PAYG. Okay. But now we're talking about what happens when you have an Australian business number. Now, I'm going to assume that the ABN that you have is probably from a sole trader business, although some of you might also have income that comes from a partnership or a not-for-profit or a company. There are lots of different kinds of businesses that you can be. And in this case, we still have 3 groups of participants in the game. So there's you working under your ABN. And now you might have lots of different names. So you might be called a freelancer, or you might be called a sole trader, or you might be called a contractor. You could have lots of different titles under here. And that's part of the reason why I'm asking you to focus on the numbers, because the words that people use to describe these different working relationships can sometimes be really confusing. You can sometimes be called a contractor because you're working under your ABN. You can sometimes be called a contractor and you're working under a tax file number. So the words can be really messy and confusing. That's why I always rely on the number. What number are you using in this professional relationship? If you're using your tax file number, then your taxes conform to the previous silly drawing. And if you're using your ABN, then this is what's happening. So you've got all these different names. Then we've got the middle creature here. Again, we'll distinguish them so that you can tell who they are. But they don't always have the same name either. So we might call these people customers. We might call them clients. We might call them our audience. We could call them our buyers. They could be a gallery or, you know, a kind of a middle person. These groovy people could also be funding bodies. So again, the income that you're going to get through your ABN could be really super varied depending on the different kinds of work you're doing. Happily though, we still have old mate who is largely unchanged. Still have the ATO. Hurrah. Now, when you make money through your ABN, in this particular scenario, when you get paid, so when someone buys a piece of artwork from you or gives you funding for a project or hires you to deliver a service, you invoice them and they pay you the whole amount. They pay you the gross. So in the previous example, they paid you net, and there were a couple of big chunks of money that weren't there because they were your super and your PAYG withholding. But now you're getting paid the whole amount, which means that for all of this kind of income, your bucket sits there empty. The idea behind this part of the process is that you have to put money in your own bucket. When you're working with your tax file number, your employer withholds money from you to put in your imaginary bucket. But now the idea is that you have to take responsibility for paying your own income tax, and that is called PAYG installments. So it's still income tax, but the difference is who's paying it. Is your employer withholding it from you and paying towards your bill on your behalf, or are you going to pay towards your bill on your own behalf? And that's the really big difference. And that's where most people get themselves into a whole lot of trouble, because if you didn't know any of this stuff, you would have had no idea, and you might have just assumed that tax was being magically withheld from you at every point to ensure that there was always enough money in your imaginary bucket, and that is not the case. I'm going to talk to you about the different ways that you can navigate this in practical terms in just a minute. I wanted to make sure, though, that we had this in our brains before I did that. You will still go through the same process at the end of the financial year. You will complete a tax return. And when you complete that tax return and you tell the tax office everything that you've been up to, then the final tax bill will be calculated. If you have only had tax file number money, then presumably there's going to be enough money in there to cover your bill. Who knows? But here, as you can see, your bucket is empty. And that's one of the main things I want to talk about tonight is how to ensure that you don't get caught out by that, because I talk to lots of people who end up with a tax bill that they weren't expecting because there wasn't enough money in their imaginary bucket. I hope the bucket thing is working for you. Are there any questions about my mad drawings and the way this all works?
Louise Cooper asked before you started doing the drawing that as sole traders we're only ever likely to owe money, because where would the tax be paid be coming from? And I think you're sort of halfway through explaining that right now. Yeah,
I am. Yes. So thank you. That is a really, really good question, Louise. And yes, I've partly answered it. The money to pay that eventual tax bill is going to have to come from you. And I'm just about to go through the practical ways that you can do that in just one moment. Any other questions before I get?
There's one more question from Edwina who asks how much you have to be earning as a sole trader before you owe tax.
I am delighted that you've asked that question, Edwina, because let me go back to sharing my screen. Give me one moment. I should have organised that a little bit earlier. But look, it's like I knew that the question was going to be asked. How much do I pay? And also, I suppose we should also talk about how do you pay? Now, I'm going to draw you another picture, and it's going to be just as complicated and silly as the last one. So, you know, prepare yourselves for that. But generally speaking, how much you pay is based on what's called the resident tax rates. So again, I've kind of skipped over tax deductions, and I am going to come back to them because that's the bit that everybody wants to talk about, and then we kind of get lost. So the last series of drawings I was talking about your assessable income. Now I'm going to be talking about your taxable income. That's the bit that's left over after we've taken out all your deductions. Now, we haven't talked about deductions yet, so if you feel like I'm skipping all over the place, I apologise, but I wanted to just make sure that we got this bit right. We'll come back to deductions in a moment. Like I said, all you have to do is try and remember this equation as I'm going through. Now, what we've got on screen here is the resident tax rates. These were kind of static for a long time, and they've just recently changed in the last financial year. And I believe under the government, you know, that promises of more tax changes are coming, but these are what the tax rates are in 2024, 2025. The tax rates are the same regardless of whether you are a sole trader or you're working under your tax file number. The tax rates are only different if you are in a company structure. Because this is the Super Tax Basics webinar, I'm not going to talk about that too much. That's certainly something that you can go and get more information about from the resources that I've shared. I'm mostly focusing on humans, employees, and most likely sole traders. So this is how much the resident tax rates are. If your taxable income is between $0 and $18,200, you pay no tax at all on that income. That's called the tax-free threshold. And then for each layer, as we go up, you pay more and more tax. I'm going to come back to this slide in just a second, but the drawing that I would like to share with you is of a trifle. Now, I've had a lot of different visual analogies for how to describe this in the past, and the trifle does seem to work quite well. If you are unfamiliar with the trifle, then I'm sad for you. Trifle is a layered dessert, much like the one you can see on screen, usually served in some sort of fabulous glass bowl, and each layer is made up of a different substance. Works perfectly well as my analogy. If it was the trifle of my childhood, the one that my grandmother used to make, then every layer of the trifle would also have some kind of alcohol in it, which I was not allowed to eat as a child because apparently you're not allowed to put that much sherry into an 8-year-old. Whatever, it's just an analogy. Hang with me. Now I'm going to just stop sharing for a minute. Hold on. And once again, torture you with my drawings. So I'll bring back those tax layers in just a moment. But this is for you to be thinking about as you're going through the year. Now, I'm going to say this a lot as we continue with this webinar. If you are making money through your ABN, or if you're making your money through any other system apart from full-time employment, waiting until the end of the financial year to sort all this stuff out is actually probably going to make the whole situation worse for you. I'm going to encourage you, even though it's probably really unfortunate and unpleasant, to actually navigate this as you go through the year. I know that sounds scary and horrible, but by navigating this as you go through the year, particularly if you're working with an ABN, you can make strategic choices about how to navigate that whole bucket situation. So we're talking about your taxable income. And here is my beautiful glass bowl into which we are going to pour the taxable income trifle. So that bottom layer there, the bottom layer of your income, which is 0 to 18,200. Remember, this is your taxable income after you've taken away all of your deductions. Everybody gets to keep that layer. So our old mate over here, the ATO, doesn't get any of that layer. And that's true for everybody in Australia. All of us get the first $18,200 of our taxable income tax-free. That's the tax-free threshold. The next layer is the layer between 18,201 and 45,000. If your taxable income falls into that bracket, then you have to give some of that layer, 16% of it actually, to the ATO. Okay, so everybody gets to keep that first layer, and of that next layer, you have to give 16% to the ATO. The layer on top of that is 45,001 through to 135,000. Sorry, my writing is really teeny tiny there, but I'm going to show you the marginal tax rates again in a moment. And of that layer, everybody who's in that layer has to give 30% of that layer to the ATO. This is not to scale, nor are we talking about real trifle. Okay, this is imagination only. So if you're in that bracket there, if your taxable income is somewhere in there, you have to give 30% of that layer plus 16% of that layer to the ATO. These add up as we keep going along. The next layer is 135 and 1 through to 190,000. If your taxable income is in that bracket, you have to give 37%. Oh, it's hard to draw. Hang on one second. 37% of that layer to the ATO. And then everything above that, if your taxable income is above $190,000, then you have to give 45% of that layer. Again, she's trying very hard to make that look real, to the ATO. In other words, the higher your taxable income is, the more tax you have to pay. So Australia has a system where if your taxable income is low, you pay a relatively low amount of tax, and as you're climbing up and up and up, you pay a higher rate of tax. This is where I also encounter quite a lot of confusion about how this whole process works. Before I explain that though, the Medicare levy kicks in kind of around there, but I'm not going to give you the exact point at which that happens because it's really dependent on a bunch of factors that I can't talk about. So it's dependent on your age and whether or not you're receiving Centrelink benefits and whether or not you have private health insurance and whether or not you're a veteran and a whole bunch of other factors that I can't talk about that I don't have any experience in. But that means that the highest rate of income tax that you can pay in Australia is 47%. The main confusion about this seems to come from the idea that if you are in that tippity top tax bracket all the way up there, you have to pay 47% of your whole taxable income to old mate ATO. That is not the case. You only pay tax on each layer as you go through. And again, if you have never known that before, please don't feel ashamed, okay? I would suggest that when I do this workshop in person, at least a third of the people in the room didn't know that, okay? If you are up there in that tippity top tax bracket, you are not giving 47% of your whole trifle to the ATO. You're only giving 47% of that little tiny bit at the top there. So if your taxable income was $190,005, you would only be taxed at the highest rate on that little bitty $5 there that just creeped over into the next layer of the tax trifle. Okay, Beck's giving me the thumbs up, which makes me feel much better, but I think it's time to stop and see if that is making sense to other people as well. And again, let me bring back those layers so you can see what I was talking about. Okay, do we have questions?
There is a question, and I think it might go back to the understanding of the equation at the beginning.
Okay,
but Vicky has asked, when claiming tax return as a tax file number, do I get all of my PAYG withholding money back or a certain proportion?
So you get a proportion. So what happens is your tax bill is calculated based on where you ended up in the trifle, right? And hopefully enough money was withheld from you by your employer to help you navigate this. That's what we have to do. I'm an employer and I withhold tax from my employees, and I am told how much to withhold from them. And the idea is that it's supposed to be enough to cover whatever might end up being in the bucket. But it isn't always, because sometimes you might have a HECS debt or there might be some other impact on it. So the reason why I bring this up and the reason why it's so important is because in the previous drawing here, you'll see that no one is putting any money into your bucket, right? So the idea behind this is that it's going to help you to figure out how much money you should be setting aside for your eventual tax bill, because it's right here in the picture. If you're tracking your taxable income through the year, first month or two, couple of months goes past and you're still down here in the tax-free threshold bit, then at that stage, you don't need to be thinking about your eventual tax bill. But if your taxable income starts creeping up into these layers, how much you're going to pay is already there. There's no mystery associated with it. It's all written down. But it does become a little bit more complicated in terms of the practical application of that. So what I'm going to do is talk about that first, and then I'll take a few more questions. So if you are making some or all of your money through your ABN, then you are going to still get a tax bill, and it is one that you are going to have to take responsibility for because no one is withholding from you. And there are three ways that you can prepare for that eventual tax bill. One really important thing to remember, though, is that when you are a sole trader, all of your money gets mushed up together. So the money that you make through your tax file money number and the money that you make through your ABN all gets combined. If you're in a partnership structure or as part of a not-for-profit or a company, that's not the case. But when you're a sole trader, and I would imagine that most of you are, it all gets mushed up together. So those calculations, even though I was looking at them as being two kind of very distinctly separate things, in reality, they're all getting mushed together. So you could be making money through your part-time job teaching at TAFE, and you could be making money through your own creative business, and the tax department mushes it all together, and that's your assessable income. So in terms of preparing for this tax bill, which is now a bit more of a mystery, there are 3 things you can do. The first thing that you can do is simply ignore the fact that you have this responsibility and wait until the end of the financial year to work it out. Now, that's not illegal. It's fine. It is scary, though, to take the ostrich approach. I totally understand why people don't want to think about this. It is boring and scary. And let's reflect for a minute on how few things in life are actually both boring and scary. And tax is one of them. It's quite the mystery. So when something is boring and scary, it's the human urge to ignore it. I totally understand. And if you ignore it, you're not doing anything illegal. But what will happen is that at some stage at the end of the financial year, or if you decide to ignore it for a long time, maybe after a few years, you're going to find yourself very likely preparing for a bill that you can't manage. If you get a tax bill that you can't manage, you can go on a payment plan. There is no shame in that. Lots of people do it. You will have to contact the ATO and work it out with them. You can also work that out through your accountant if you want to. So if you get a big tax bill and you can't pay it, don't freak out and leave the country. You know, the ATO isn't going anywhere and neither are you. So a plan can be made to help you pay that off over a period of time. But this isn't my favourite method, and it's certainly not one that I recommend because it just keeps you in the dark and keeps you afraid, and it doesn't need to be that way. The other method that you can use is to actually pay your PAYG instalments as you go through the year. So this method means tracking where you are in terms of your taxable income and then working out how much tax you're probably going to have to pay as a result and deliberately depositing that money into your own bucket. It's really easy to do. Certainly this is the way I do it, and it means that you're putting money into your own bucket the whole time, calculating it out as best you can based on the maths that I've given you, and then just putting that into your own account in the hope that you're putting in enough money to meet your eventual tax bill. Hopefully you are, but if you also put in more money than you're supposed to, then you will get a refund rather than your employer putting that money into your account on your behalf. You are putting the money in there yourself. It's very, very easy to set up. It's very simple. The downside of this is that you can't get that money back out again. This is a really good process for those of you who are pretty sure you're going to have to pay a tax bill and you don't trust yourself to actually put that money aside and have it available at the end of the year. And if that's you, then this is a really fantastic method for you. If you've been running your own business for a little while, then the ATO will also tell you how much they recommend that you put aside in PAYG instalments. One quick thing that I want to mention about that is that you can vary the amount whenever you like. So I'm sure she won't mind me telling you this. This happened to my daughter. So my daughter runs her own business as a sole trader, and she had a pretty good year, one financial year, and she ended up putting quite a lot of money into her own tax account to help her prepare for her eventual tax bill. The following year, she got a letter from the ATO saying, we expect you to put the same amount of money into your tax account this year as you did last year. Problem is, my daughter wasn't having as good a year because, you know, the economy, etc. She panicked, very understandably, because letters from the ATO were scary. But really what the ATO was saying to her is, we're going to assume that you will make the same amount of money this year as you did last year, which means we are going to assume that you have to put the same amount of money aside. My daughter simply wrote back and said, no, I won't be doing that because I am not in the same position, my taxable income is lower, I will be putting this much money into my account from now on. And the tax department said, fine. Because remember, you're not actually paying your taxes yet. You don't actually pay your taxes until you do your tax return. That's the paperwork that triggers the bill. Up until that point, what we're doing is putting money aside to prepare for a bill that hasn't been calculated yet. Hope that makes sense. My third method, and probably the one that most of you would prefer, is the saving up method, which is exactly what it sounds like. Now, the saving up method is probably best for those of you who are pretty disciplined about your money and you feel confident that you can save up the money and put it aside. Same idea as paying your own installments, except this time, instead of actually calculating how much you have to pay and paying it, you calculate how much you think you're going to have to pay and you put it in a separate savings account. And then you don't touch it unless you absolutely have to. This method works best if you put that money aside all the way through the year and then don't think about it. The benefit of that, however, is that should you end up in, financial emergency situation, the money is there and you can access it. Whereas the money that you give to the ATO isn't available to you anymore. That's what a lot of people do. The recommendation, in fact, particularly for performing artists, is that, once your taxable income gets to about there, just start putting 16%, even 15%, or whatever any invoice is into a separate account. Track that, keep tracking it. Once you get up into that next layer, then you might want to put a bit more in, 30%. So every time you get paid through an invoice or every time you receive money through an online sale or something like that, you just get into the habit of transferring out the bit that has to go to the ATO. What that means, of course, is this only works if you keep an eye on it all year. If you wait until the end of the financial year and then try and work it out, it's going to be really tricky. If you have any kind of money coming in through an ABN, then my strongest recommendation is to keep an eye on it at least monthly as you're kind of ticking along. You don't have to, like I said, if you wanted to use the ostrich method, go right ahead, but it is not the one that I prefer. Now, does anyone have any questions?
I think Henrietta had a question that you answered, but just to reiterate, when you've got a part-time job under tax file number and work under an ABN, you put the whole lot together and treat it as an entire income.
If you're a sole trader, so that, for Henrietta, you need to figure out what your business structure is with your tax file number. It's very likely that you're a sole trader, but you can go and check. And yeah, then if you're a sole trader, that's true.
And Philip is asking whether you have a drawing for a tax credit.
Oh, Philip, you cheeky chicken. No. I do have a very nice GST interpretive dance, but I'm not going to do that either. So unfortunately, it's a tax basics webinar, but thanks, I appreciate it. And that gives me something to develop. So now we are going to talk about deductions, but before we do that, we talk about talk about this crazy thing called hobby versus business, which I mentioned earlier. And just to remind you, the reason why this is important is because of that assessable versus non-assessable income thing. So generally speaking, any money that you make through your business is assessable income, and that equation that I showed you applies. And any money that you make through a hobby is not assessable income and you don't have to worry about it. But the problem is what we like to do for our professions, other people like to do as a hobby. How does the ATO tell the difference? Well, I'm going to give you the broad strokes about that. But the first and most important thing that I want to mention is that it's not about the money. So I hear a lot of rumours and conjecture about the idea that there's a certain amount of money that you can make that instantly transforms you into a professional. That is not true, and that is not how the tax office decides who is a professional and who is not. Certainly the money is important, So how much of your assessable income is coming through your creative work versus other kinds of work is one of the calculating factors, but it's not the only one. And the reason it's not is because the rules that apply to us in this space apply to everybody. So the tax office doesn't look at you and say, well, you're not making any money as a visual artist, therefore you're not a visual artist. They don't do that because they don't do that with any other business. So, for example, if you're running a cafe and that cafe isn't making any money, which sometimes happens, the ATO doesn't then turn around and say, well, you're not really a cafe. I mean, you look like a cafe and you're making coffee, but you're not making any money, so you're not a cafe anymore, the end. It's not that simple. Lots and lots of businesses don't make any money. They don't make any money from a taxable income point of view. It's called either breaking even or running at a loss. And in fact, the majority of small businesses will either break even or run at a loss at some stage in their lives, sometimes for years. So if we still think that a cafe is a cafe, even if it's running at a loss, we have to also think that an artist is an artist, even if they're running at a loss. The same rules apply for both. And it's those rules that I want to share with you, because sometimes I'm worried that accountants don't always share this information. And I'm not dismissing accountants. I think they're amazing. And I hope that you all have amazing accountants that are helping you. But these characteristics that I'm about to talk about come from those specialised tax rulings that I mentioned at the beginning of the webinar. Now, there is information that you can get from business.gov.au about this as well. The link is in the Dropbox. But what I want to talk about is these characteristics of business. And again, there's a workbook in the Dropbox that goes through this in a lot more detail. The first thing that the ATO would look at if they had to examine you to decide whether or not your income should be assessable is whether or not you are being business-like. This is super vague. Again, not my fault. I am just reflecting back on what the ATO says. Business-like could be any or all of these things. It needs to be more than one of these things, but it could be a combination of them. So being business-like means you have an ABN, for example, but that's not the only thing. You also have to have the intention to make a profit. Intention, believe it or not, is really important to the ATO. Are you doing what you do in order to have fun, or are you doing what you're doing because you want to make money? That intention is super different. Okay, if you're making cupcakes for your friends because you enjoy it, then you have a very different intention from someone who's making cupcakes because they want to make money out of it. Maybe not right now, but at some point in the future. And the more you can do to demonstrate that intention, the better. I'll keep going through the list. You have repetition in paid work and in your administrative processes. People who are conducting hobbies don't really have systems and processes and ways of doing things. They just do it. I like to dance. That's one of my hobbies. Sometimes I go dancing, sometimes I don't. I don't really have a system for it. When it comes to my business, on the other hand, I have systems. I have repetitious ways in which I take care of things. And the more you can demonstrate that through your diary or your calendar, the more likely it is that you're going to be seen as business-like, which is another reason why managing your finances in a more regular way is a really good idea. Having a separate bank account for any of your ABN income and expenses is a really good idea. Maybe you're using some accounting systems. I'll go through those in a moment. You might have a business name that is separate from your own, although you don't have to. It's quite common in the creative industries to use your own name. You might have a business or a strategic plan, which is a really good way of demonstrating your intention, by the way. Hobbyists don't tend to have business plans. And finally, you're actually marketing yourself. Again, if you like making cakes because it's fun and you want to feed your friends, you don't have to do any marketing. But if you want to make cakes because you intend to make a profit from it one day, you are probably going to have a website and you are probably going to have social media channels. You're going to have supports in place to help you market yourself to all those nice people who might have money for you. If you are doing these things, there is a very good chance that the ATO is going to classify you as being business-like. Essentially, when the ATO are questioning you, or if your accountant is going through this process with you, then they're going to really be asking you two big questions. The first one is, do you have the purpose of profit as well as the prospects of profit? In other words, are you conducting yourself in a way that means money will be coming to you at some stage in the future? And is it possible for money to come your way in the future? Are other people making money doing the same thing as you? Do other businesses exist that are like yours? Do you have the purpose of profit as well as the prospects of profit? And I know that language is really awkward. I'm using the language that the tax office uses so that you can understand it. Hopefully that does make sense. The other big question they're going to ask you is your activity planned, organised and carried on in a business-like manner, which includes the list, some of the lists that I just gave you. I'm also going to give you a really speedy tour of some of the other ways that you can keep yourself organised, which will help you to carry on in a business-like manner. The big kind of endy point of this particular section is, can you prove it? When you are conducting your activities and when you are having this relationship with the tax office, it is incredibly important to remember that you are documenting everything as it's happening. And the kinds of records that you're going to keep, I'll go through with you in a minute, but they include things like emails that you have with clients. They include your website and your social media. They include your diary and your calendar where you record meetings. They include any apps and processes that you're using to help you stay organized. All of that is proof that you are conducting yourself as a professional and not as a hobbyist. So it's much, much more complex than just how much money you make. That's the bottom line when it comes to the difference. I know that is a really speedy and somewhat vague tour of this big thorny problem, but I hope it at least gives you a bit of a starting off point to have a conversation with your accountant or with the ATO. Questions?
Emma has asked, she's curious about the intention to make a profit. As a fiction writer, she doesn't expect the possible money you could make to actually be a livable income now or any time in the near future. So is unsure of that, where they sit. Yeah.
That's a really clever question, Emma. Thank you for asking it. So that is just one aspect of your professional work. So being a fiction writer and presumably writing books or short stories is one of the ways that you can make money from your craft. But you can also turn that craft into a diversification of income, which is what a lot of people end up doing. So you might work as a librarian, or you might work as a teacher, you might work as a copywriter, you might work as a ghostwriter for other people. And then all of those different things are different aspects of your writing work. So even though one of those aspects, writing books, isn't necessarily going to generate any income right now, you could be treating your writing as a business in that way. Now, if that doesn't suit you, I totally understand. Maybe you are writing fiction because you really love it and you don't actually intend to make any money out of it. You're not operating yourself in that way. That's fine. But that means that you might be classified as a hobbyist by the ATO. And what that means, well, the part that I wasn't really clear about is, if your work is classified as a hobby by the ATO, it simply means you're not going to be entitled to the same generosity of deductions as you would be if you were classified as a professional. That's the difference.
Great. And the next question is from Louise about what happens if a sole trader runs at a loss.
So usually what happens, Louise, the idea is that you have kept your sole trader business afloat with other income, which you're allowed to do. It's perfectly legal. In most cases, that loss will become a tax deduction for you in the future, but you'd have to check with your own accountant to make sure that that was the case for you.
Right. Thanks for that. There aren't any more questions that I can see. I think Henrietta followed up their question about the smush of the...
Of the smush, yes.
Yeah. So I think it's, from what I'm hearing from you, it's clear that when you're doing a tax return, you're putting in all of your assessable income into that tax return. So it's
right.
the stuff that you get from your work with a tax file number and an ABN. Yeah.
Yes, that's right. And that's why I keep focusing on those numbers, because the word that you might use to describe yourself in those different situations can be really varied. Just focus on the numbers. So if you're a sole trader with an ABN and you're also getting money from your tax file number, even if you're working for a company that's not anything to do with the creative industries, the mush happens. The mush. Yeah. I realize that I'm going to be going a little bit over. I do apologise, but this is being recorded, so if people have to leave, they can catch up. I just want to make a really quick reference to goods and services tax. I'm not going to talk about goods and services tax, but if I don't mention it, people think I've forgotten. So I'm not going to talk about it. It's more complex than what we're talking about here, but there is more information in the Dropbox about goods and services tax that you can go and have a look at. I'm nervous about taking questions about GST, so I'm going to skip that one and talk about tax deductions. So let me go back to my lovely equation. We started off talking about assessable income and all the different places that can come from. We then talked about your taxable income and how much tax you have to pay. What we didn't talk about is the lumpy bit in the middle, which is your tax deductions. Now, I'm again going to give you a speedy tour of this particular world, but there are lots of resources that you can access in the Dropbox and on the ATO's website about this particular bit of the whole equation. So these are the golden rules, what the ATO accepts as a valid business deduction. The expense must have been for your business, in other words, your ABN, not for private use. If the expense is for a mix of business and private use, you can only claim the portion that is used for your business, and you must always have records to prove it. So, for example, if you buy a laptop and you only ever use it for your business, you can claim a deduction of the full purchase price. However, if you use it half of the time for your business and half of the time for private use, then you can only claim 50% as a tax deduction. That probably sounds really complex, but there are lots of calculators on the ATO's website to help you work it out, and also hopefully your accountant can help you out as well. So, because this can be very broad, particularly if you have an ABN, I'm just going to quickly talk about the things that are not a tax deduction. So the first thing that is not a tax deduction is anything that you use 100% for personal use, okay? If it's got absolutely nothing to do with your professional life, whether that's tax file number or ABN, you can't claim it, it doesn't count. The second thing is anything physical or medical. Now, you will see a little asterisk there. For certain professionals working in the creative industries, we can claim some physical and medical expenses. And those are outlined in those tax rulings that I mentioned way back at the very beginning. For the majority of us mere mortals, we can't claim anything physical or medical. And in fact, the only people who can usually are people who have to maintain an extreme level of fitness in order to do their creative work. That extreme level of fitness would include professional dancers, acrobats, stunt performers, and people who have to use their body as part of their professional creative work. For the rest of us, all of that is classified as a personal expense. And the last one is childcare, which I think it's in everybody's best interest that you don't get me started on that. Just thought I'd quickly mention it, because otherwise there'll be an uprising. So let's talk about working from home. And I'm giving you the big lumpy categories here. So if you work from home, then you are entitled to claim some of the costs of working from home as a tax deduction. That might include a percentage of your rent. It might include a percentage of your home Wi-Fi and internet access. And the best way to calculate that is to use the calculator that's on the ATO's website. All of these different deductions that I'm talking about have these calculators available on the website. I'm pretty sure they're all in the Dropbox. I will definitely check. She says, just quickly making a note to herself, I will definitely check again to make sure that they're all there once we're finished talking. The next one is using, the next one is using your car. So if you use your car to drive you around for the purposes of your creative work, then you might also be entitled to a tax deduction associated with your car. Now, you're only allowed to claim the costs of travelling from one place of work to another. So you can't claim the cost of travelling from home to work, but there are circumstances, particularly with your ABN, where you can claim costs associated with your car. And I'm going to be really boring about this. There is also a car expense calculator on the ATO's website that you can use. You might also have other kinds of travel associated with your professional work, not your car, but maybe you like to catch the bus, or you catch a train, or you hire a car, or you get a ferry, or you go on a plane. And for all those other kinds of travel, then you also can claim those costs if they are associated with your professional work. Now, there are some rules around that which are listed here on this lovely PDF, which I've also put into the Dropbox for you. You will need to keep records of all of these things. So that will include copies of any of your receipts or tickets or, statements from your bank account reflecting that you've made these expenses. But you are entitled to a lot of these as well, particularly if you're traveling away from home for more than one night. The ATO doesn't calculate these deductions based on how far you travel. They calculate them based on whether or not you're traveling overnight. Earlier on, I mentioned that one of the things that you can do to be more business-like is to have a separate account. If you are traveling and doing these sorts of things through your ABN, you can actually get duplicates of the different ways in which you travel. So I, for example, have 2 Opal cards here in New South Wales, one that I use for work travel and one that I use for personal travel. So I'm keeping the records separate. I also have 2 Uber accounts, one that I use for personal expenses and one that I only ever use for business. You'd be surprised at how much you can actually split between those 2 things, which means that as you're kind of living your life, all you ever really have to do is say, is this a work trip or a personal trip? And then you can kind of figure it out. You can also sometimes claim the costs of self-education. And again, there's a resource in the Dropbox for you already about that. You can claim self-education expenses if they are connected to your current employment and are improving a specific skill set or a specific knowledge that you have. You can also claim self-education if it's going to improve your professional prospects. Now, this means you can actually sometimes claim self-education expenses all the way up to a university degree, but you have to be able to prove that that self-education is going to make you more employable, or it is going to enhance your professional practice in a really demonstrable way. Again, some of the ways in which you can work that out are here for you. The other big lump is other people. So if you're going to pay other people, there's also a self-education expenses calculator. I'm sorry, I forgot about that. You can go and check that out too. If you're going to be paying other people, if you're going to be hiring other people to work freelance for you, or if you're going to be engaging the services of an accountant or a bookkeeper or whomever it might be, then all of those expenses are also usually a tax deduction. And there's a whole section on the ATO's website about paying other people and how to keep records of that. Those are the kind of big lumpy deductions that most of us are going to be entitled to. And then there's everything else. Now, as I mentioned, I'm not going to be sharing the slides with you, but you are most welcome to take a screenshot of that big long list if you want to. And that includes accounting fees, money that you spend on advertising, bank fees. If you have to buy protective clothing or footwear, that might be a tax deduction. Money that you spend on coaching or getting mentored by another professional. Money you spend on computers, software, attending conferences, consumables that you just use as part of your work, costumes, if that's appropriate for your field, donations to charity, hosting events or attending events for professional capacity building, your insurances, any of the licenses that you might have to pay, marketing expenses, mentoring, memberships, pitching, professional development, the list goes on. And it's a huge list and it's a vague list. So again, I can't answer specific questions about your specific circumstances, but this is a pretty comprehensive list. Essentially, if I can just go back to what I said at the very beginning, if you have had to buy something, if it was necessary for you to buy that thing in order for you to do your professional practice, then it is very likely going to be a tax deduction for you. But this is where you're going to have to get the help of an accountant or the calculators on the ATO's website to help you work it out. I feel there'll be questions. I can feel it.
There are a few questions.
Sure.
So one of the questions is happened earlier on in that section where Louise has asked about claiming that physical/medical expense in disability arts.
Oh, that is an area that I don't know enough about, I'm afraid, Louise, and I don't want to give you any advice without knowing the specifics of your circumstance. What I would suggest is that you make sure your accountant has experience working in disability arts and working with the NDIS, because that's a whole other minefield that I'm not really across. But a lot of like really good accountants who work in this space will be able to help you with that.
Thanks for that. We've got a question from Kay, who asks, can we only deduct things that we have receipts for, i.e. if we lose receipts and records, can we use bank statements, etc.?
What the ATO really likes is a digital record. So technically speaking, you can only deduct things if you've got proof, but that proof could be a photo. So in a moment, I'm going to show you some of the apps that we recommend that people use. And although they haven't 100% confirmed it, the ATO will accept a digital photograph or a digital receipt instead of a paper one. The rumor is they're moving exclusively into digital only record keeping, so we won't have to keep any paper at all in the future. I don't think we're 100% there yet. If you've already lost something, then you might be able to go back to the store and get a copy. I know that some stores like Bunnings and IKEA can give you a copy of a receipt if you can specify when you bought it, which is kind of scary. Otherwise, you might just have to let it go. But try. I mean, a bank statement isn't usually enough. You usually need something else.
Amelia asks if travelling on a plane for work is a tax deduction.
Yes, usually it is, as long as you're going to be as long as you're traveling from one place of work to another, or if you're going to be away overnight, usually. But again, I can't give you specific advice about your circumstance.
Brilliant. And I think that is it in terms of the questions, but we do have some very nice comments about making tax fun.
Oh my God. Did you even think that was a thing? I promise I'm almost at the end. I realise I've gone over. I probably spent a bit too much time drawing pictures, but you know, we are recording this, so if you have to leave, you can come back and watch the end. I've only got a few more things I want to share, but one of those things is very important. I want to talk about keeping records, because I've mentioned record keeping a few times, so now I want to be really clear what that means. So these are the 5 rules for record keeping that the tax office has. The first one is you need to keep all of the records related to starting, running, changing, selling, or closing a business that are relevant to your tax and super affairs. If your expenses relate to business use and personal use, you need to make sure you've got clear documents to show the business portion. Now, for a lot of the calculators that I showed you, the calculations can be done in the ATO app. and in their website. But sometimes you just have to figure it out for yourself. So again, as a professional filmmaker, I have to decide for myself how much of my movie tickets I can claim as a tax deduction, or how much of my Foxtel subscription I can claim as a tax deduction. And the way I've done that is I've kind of worked it out based on time and my own decisions. I try not to be overly generous with myself in these situations because I just feel like that might be baiting the bear. But, you know, if I can kind of show that I've got a good record of how long I spend on my laptop for personal use as opposed to my business use, or how long, you know, how much time I spend watching Foxtel for professional reasons as opposed to personal reasons, then that's one of the ways you can do it. And again, I'm not giving you advice. That's just my own circumstance. You guys will have to figure it out for yourselves. The relevant information in your records must not be changed and must be stored in a way that protects that information from being damaged, which is why digital methods are becoming increasingly the norm. You need to keep most of your records for at least 5 years. Some records need to be kept for longer, so you'll have to check that. You need to be able to show the ATO your records if they ask for them. So that kind of goes back to that earlier question about losing a receipt. The problem with that is if the ATO asks you for proof of that purchase and you don't have it, then it can cause ongoing problems. And your records have to be in English, or they have to be converted into English. You can create the translation yourself. So if you're traveling and you buy something for work and the receipt that you get is not in English, you can actually just write on it yourself what it is in English, and that's totally fine. Now, those are the rules, and there are also different systems that you can use to help you. So the first one that I want to recommend is the ATO's app. I think I've actually got 2 slides for this, which is a bit silly. The ATO app is actually really fantastic. It gets better every year. It's free and easily downloadable depending on what device you're using. If any of you are using it and you like it, you know, it'd be great to hear that in the chat. You can use it for your personal tax situation with your tax file number, and you can also use it with your ABN. That allows you to do things like take a photo of a receipt right there and then, make a recording of what that receipt is for, and then if you then lose the receipt, you've got a digital record of it, which makes things much easier. You might also want to spend a bit of time thinking about cloud accounting at this point. I don't love the fact that it's called cloud accounting because it's not in the cloud. It's in giant supercomputers built inside mountains. Much a better way of thinking about it is online accounting. And there are a number of different online accounting systems that you can use. I've got a whole bunch of them there. I don't tend to make specific recommendations, but one that I would actively encourage you to check out is called Rounded. And the reason I'm suggesting that you check out Rounded is because it's an Australian app that has been specifically designed for freelancers. So, and there are others out there. Like I said, there's a whole page of them. You might want to use MYOB or Xero or Square, but check out Rounded simply because it's been made specifically for freelancers, which means it's also creative friendly. You might, like I said, also want to check out the ATO's app. And there's also Henry, which is another app that can actually automate some of these processes for you. Now, I know that's really appealing and I've heard great things about Henry. I do want to make it clear, though, that knowing what's happening behind the automation is really important. You know, I'd hate for you to embark on a process where everything is being automated for you. You don't actually understand what's going on, but please do go and have a look at Henry if you think that's an appealing idea for you. I also have been mentioning using specific accountants, people that can help you, and that's super important. We don't make any specific recommendations about any specific accountants because that's your choice. But on our website at Creative Plus Business, we have a listing of the groovy accountants. What constitutes a groovy accountant is an accountant with experience working in the creative industries. There are a whole bunch of them on this page that you can go and have a look at. There are also a bunch who aren't on this page that you can also go and check out. Main thing I want to be clear about is that usually a specialist accountant will be more expensive than an ordinary accountant, but that should also mean that they have all these skills and knowledge and stuff that I've been talking about that they can bring to your specific circumstance. Like I said, they should know more than me. They should be more helpful than me because I'm not an accountant. So that's just a listing of where you can go and find them. And in the Dropbox, there's also information about how to find a new accountant should you need one to think about. I realize I'm going massively over time. I just want to make one final comment. I've said this a couple of times. Please make regular time for your finances. There's a resource in the Dropbox called Monthly Money Day, which goes through how to take care of your finances month to month to month, as opposed to just leaving everything till the end of the financial year. As I said earlier, that is my highest recommendation when it comes to navigating all of this. Don't wait. Start looking after your finances in a regular way, and this resource will help you. Did anyone have any questions about that roller coaster at the end?
There is only a request for a dance and karaoke finale.
Well, that is not going to happen, although because the reason it's not going to happen is because I want to reward you, and that would not be a reward. So that would be a punishment, and you don't need any more punishment. I want to remind you about the Dropbox. I will double check it tomorrow, but when I checked today, the resources that I've mentioned are in there. I will go in and have another look. I also want to mention that everything that I talked about with you is also on our website in the Tax Time for Creative Business section, and that's also where you're going to find the Groovy Accountants. Thank you so much for giving me your time tonight and for giving me that extra 15 minutes, which I absolutely am devastated by because it should not have taken so long. Thank you so much for coming.
Thank you so much, Monica, and thanks for everyone for joining. There may be an email coming your way shortly that will be surveying people on their experiences with Create Exchange, and we will be also presenting a whole new suite of programs coming up. So thanks so much, Monica, again for your wonderful presentation stylings and for your knowledge and for
my mad drawings.
It's a really great opportunity for us to learn, and I for one have learned 100% more, I should say, about tax for freelancers than I knew before. So I'm very happy to have experienced it myself. Thank you so much. Thank you, everyone.
Thanks, everyone.
Good night. Bye. Bye.